Welcome, everyone. I'm Robert Mandelbaum, Director of Research with CBRE Hotels, and I'm pleased to announce that the 12th revised edition of the Uniform System of Accounts for the Lodging Industry was ratified by the Global Finance Committee earlier this week. Yay! So, purpose of this presentation today, we'll provide a very high-level overview of the process enacted to update the uniform system. We're going to describe the factors that influences changes to the uniform system. And then we're going to highlight some of the major changes that you'll see from the 11th edition to the 12th edition. Throughout the presentation, we're going to want some input from you. So we're going to ask you some polling questions. Conversely, at the end of the presentation, we're going to be happy to answer questions you may have. Please use the chat function to record your questions. We'll answer those at the end. And as Brittany mentioned, take as many notes as you wish, but you will be provided with a recording and the slides that we're using here for today's presentation. So, the responsibility for updating and maintaining the uniform system of accounts rests with the Global Finance Committee, a joint committee that was formed by the hospitality, financial, and technology professionals and the American Hotel and Lodging Association. The committee consists of a wide variety of 30 diverse industry professionals from all around the world. On the committee are representatives from the largest ownership, franchising, brand, management, asset management, advisory, benchmarking, accounting, and educational organizations. The diversity of the committee is very important since each member brings to the table their unique perspective of what they do in the industry and where they practice within the hospitality industry. Changes to USALI are influenced by several factors, including feedback from the industry. After we issued the 11th edition of the uniform system, we received over 100 FAQs that helped guide us in terms of those issues that needed either further clarification or additional guidance. At the start of the process of updating the 12th edition, back in 2014, HFTP conducted a poll of all of its members worldwide to get their feedback on what issues should be addressed in the 12th edition of USALI. And then finally, over the past several months, hopefully you on the call will have seen the exposure drafts that were distributed to industry professionals and organizations all around the world, so you could get an advanced look at the changes that were being made and provide feedback to the committee as well. Other factors that influence the need to change, changes to accounting rules and regulations. The guidance in USALI is intended to be consistent with GAAP and IFRS. The evolution of hotel operations. Think back to 2014 and how the lodging industry has changed. All the new revenue sources, all the different expenses that hotels are incurring. All of these need to be accounted for and addressed in terms of the proper reporting and where they should be placed in that summary operating statement of a uniform system of accounts formatted report. And then finally, for the 12th edition, our committee had like one overarching goal that drove all the decisions we made. We wanted to improve operational and financial reporting standards for better stakeholder understanding and decision-making. That was very key. Everything we did was for better understanding, better decision-making for all lodging industry participants. So before I present our presenters for the day, we'd like to get to know you all. So we ask that you please answer the following two polling questions that will appear on your screen. So please bring up polling question number 1. Where are you joining us today? We saw in the chat that so many of you are from outside of North America. That's good to see. So it looks like the majority are from North America, US, Canada, Mexico. Good showing from Europe. Thank you. I guess it maybe is a little late at night for Asia, but thank you for those of you who are staying up late to join us. Okay. If you could pick up polling question number 2. So what is your primary role in this industry? Select one, please. Large number of people from corporate and regional offices. 24% of you from at the property level, welcome. Vendors to the industry, other. Thank you very much. So presenting today are my colleagues from the Global Finance Committee that represent the diversity we talked about before. We have an owner, we have a brand, and we have a large management company. So my colleagues are Gina Tallarico, Senior Vice President, Global Head of Acquisition Integration at Hyatt Hotels Corporation, and co-chair of the GFC. Ray Martz, our other co-chair of the GFC, is co-president, chief financial officer, treasurer, and secretary of Pebblebrook Hotels Trust. And John Houghton, senior vice president of analytics at Aimbridge Hospitality. So the major changes we will be discussing today are the following 6 changes. But before we go any further, we have one more question of the audience. So if you could bring up poll question number 3, please. Does your property offer an executive lounge? Or any of your properties, if you're representing multiple properties? Okay, so a fair number, 40%, Gina. So this question goes for Gina. The 12th edition introduces more detailed reporting for revenues and expenses related to executive lounges. Executive lounges, private areas of a hotel accessible for an upcharge, often as a room rate category, have been around for decades. What prompted these changes now?
Great question. Thank you, Robert. And a brief thank you to AHLA and HFTP for your constant support over the years, and also to all the members of the Global Finance Committee. Hopefully you're listening today, without whom this book would not be possible. So Robert, what prompted these changes now really aligns with the growing global composition of the committee. So increasing adoption of USALI around the world has been a high priority to provide that greater comparability and benchmarking across the world. So therefore, when we went and recruited members for the Global Finance Committee, we deliberately selected members from regions outside of the Americas. We now have representation from Europe and from Asia, and those committee members tend to raise topics that are of greater significance in those regions. And one of those examples is reporting for executive lounges. Executive lounge operations in Asia, for example, tends to be more significant than it does in other parts of the world. And those stakeholders from the region had expressed a desire for more transparency, which aligns to greater decision-making, which is what you led with. And with that, we decided to break out the executive lounge revenue and expense if material. And this allows for some flexibility for the hotels to decide, is this material for my hotel? And if so, we would break that out differently than if not. So we also introduced the allocation of the costs associated with providing loyalty program member benefits, access to these clubs, and allocating them to a new account called Loyalty Program Member Benefits that sits in the Rooms Department. A big thank you to Casey Gallagher and the entire Rooms Department subcommittee who authored these changes. And these changes will be explored in more detail in the upcoming Rooms webinar on June 6th. So a little plug, don't miss it.
Thank you, Gina. Staying in the Rooms Department, if you don't mind. One of the motivations for change in the 12th edition is to provide discrete exposure to those cost categories that enable owners and operators to evaluate the value of certain expenses. One of the items that we received feedback on was industry loyalty programs. Therefore, we created some new expense categories within the rooms and sales and marketing departments to capture these costs on a discrete basis. Can you talk about this, the increased exposure to loyalty program costs and expenses?
Yes, thank you, Robert. As you know, loyalty programs have been a long, valuable tool to drive revenue. And generally, loyalty program members, they stay more, they spend more, and they tend to book through direct channels, which means a lower acquisition costs. But that said, there was a clear desire of our stakeholders to provide greater transparency around those loyalty costs that are incurred to drive revenue coming from that member base. So with that in mind, we aggregated the cost to deliver the on-property member benefits separately from the assessment fees on paid stays and from the promotional costs, which led to the creation of new accounts in both the rooms and the sales and marketing department. So now the costs to deliver those on-property member benefits, such as complimentary bottled water, complimentary breakfast, those are now recording or will be recorded in a new account called Loyalty Program Member Benefits in the rooms department, while the assessments on the paid stays and the cost to promotional points will remain in sales and marketing, but they have been separated into different accounts. In addition, oftentimes what we see in the industry is that hotels will issue loyalty points for service remediation issues, and that can relate to any department within the hotel. So with that in mind, those costs are being recorded in A&G in a new separate account. We've also added a new recommended statistic for calculating consistently loyalty member room night penetration, which I think many in the industry will find valuable. And I just want to point out that while this enhanced reporting does provide greater transparency, caution should also be taken when using it as benchmarks across different brand loyalty programs, because they do vary significantly in what they offer and what the terms are.
Thank you very much. Our next polling question, if you could pop up polling question number 4.
Sorry, Robert, I'm trying to get it up right now.
Okay. Or we could come back to it after.
1 second. Here we go.
Thank you.
Mhm.
So the nature of this question has to do with the need for properties to report environmental impact data to a governmental agency, local, regional, national. And by environmental impact data, things like greenhouse gases, energy consumption, waste generated. Okay, so 50-50. Slightly more people not having to report at this point in time to government agencies. So Ray, you were involved with this department in this committee. The topic of green and sustainable operating practices was first addressed back in the 10th edition of USALI. And then for the 11th edition, we added a lot more metrics in terms of utility expenses and refuse. But in the 12th edition, in recognition of the increased environmental and sustainability reporting requirements hotels are faced with these days, we pretty much did a complete overhaul of what we've known for many, many years as the utilities department. So could you please explain a couple of things? The reason why such major changes were made to the utilities department, the research that was conducted to inform these changes, and then describe what the new department schedule looks like.
Sure. Well, thanks, Robert, for the introduction. So the utilities department is about to get a lot more exciting. I know up to this time, a lot of the utilities have been, especially for the property controllers, and you get your invoices and bills from the electric, water, sewer, gas and electric, and all those items. The world's changing, as we all know, as we noticed from the poll question there. About half of the users have to report now their energy usage, and that's a part of a lot of mandate to the cities and states and municipalities. And if you're not reporting to one of these municipalities, you're lucky. It's not going to last forever. It's coming to you shortly. This is the direction we're seeing. So when we took a step back to understand where the world's going, we realized that utilities didn't really capture everything that is needed in the new changing world. So we also realized as we look at sustainability reporting and greenhouse gas emissions and all those areas, it's much more comprehensive than just the utility department. It's also bringing in areas like waste as an example. So waste, as you all know, is in property operations and maintenance currently kind of buried in there, not really looked at much or monitored. But when we you take a step back to understand, what creates greenhouse gases and emissions in those areas, it is clearly your energy usage, it's your water usage, but it's also waste. Waste is a big part of your energy emissions, but it's kind of lost in there. So that was the reason for really expanding and renaming utilities to energy, water, and waste. We just abbreviated as EWW, which is easier to say, to account for this. So it allows hotels to better monitor and track these areas. And then it's not just for what has to be reported back to cities and states in many cases. It's also what we're seeing more and more, and this is a lot of feedback we got from a lot of our members in Europe and in Asia. It's what meeting planners now require for having a meeting as part of an RFP in many cases. A hotel meeting planner wants to know, what is a hotel doing with sustainability, for greenhouse gas emissions, for recycling, and all those areas. So this new expanded EWW section provides a lot more tools for the operator to not just track the cost of it, but a lot of other metrics in there. So in addition to providing good metrics for looking at energy cost per occupied room, water usage, water intensity, and waste intensity per occupied room, we have a slew of many new metrics, which allows the hotel to better benchmark how they're performing, as well as to eventually track this greenhouse gas emissions as it's required. So the tools we provide in the book allows any director of finance and probably working with your director of engineering to calculate the greenhouse gas emissions on a very basic level. Now, if you want to go in a lot more detail, USALI 12th edition provides some of those resources to do that, but it'll at least provide you on a basic level. Which we think is important to do. It's important for the hotel industry and us as good corporate stewards here in the world. Now, when we put together these areas, this wasn't just the 30-member committee of the Global Finance Committee that worked on that. We also received a lot of feedback and support from the Sustainability Committee of the American Hotel and Lodging Association. So we want to thank them for their contributions. Greenview, who's an industry-leading consultant based in London and Singapore, they were also very instrumental in a lot of feedback they provided. So this was really a global effort in putting this together. And we know everything is still changing in the sustainability world, and reporting and what we do now will likely change in the next 5 and 10 years. But we think this does a really good job in pushing forward that. So we're really excited about it. And we will be also hosting a separate webinar talking about the energy, water, and waste area. And the two members from the GFC, Ralph and Agnes, will be participating in that committee later this summer. So stay tuned on that. But we're excited now. Utilities is now an exciting department, a lot going on there. And it's something we'll have more value and need in the future. So thanks, Robert.
Thank you, Ray. And again, having served on the committee now for 3 different editions, it's interesting to see the evolution. Like I said, back in the 10th edition, we started to see the influence of green and sustainable practices. We had paragraphs about it. We added some metrics in the 11th edition. And now in the 12th edition, it's full bore, fully recognizing all the necessary, required, and valuable statistics that one needs to be tracking. Thank you, Ray. So one more final polling question, question 5, if you could bring that up. This has to do with FTEs. How many FTEs are currently at your hotel, and how does that compare to pre-pandemic levels? For those of you not sure, FTE, full-time equivalent employee. Interesting. So as expected, majority, or around 43%, fewer employees, but a fair number of properties have the same, and even some more. So that was somewhat surprising. Good to know. Okay. So consistent with the committee's desire to provide owners and operators with greater transparency to the revenues and expenses that have the greatest impact on profitability, the 12th edition of USALI has 2 new informational schedules that are required in order to be in conformance with the 12th edition of the Uniform System of Accounts. John, so, labor is, known to be the biggest expense at hotels. The current USALI schedules do a good job of presenting salary, wage, employee benefit expenditure data, but it really doesn't go much beyond that. So please describe for the audience what data will be presented in the new labor FTE schedule, how this data will provide owners with a greater understanding of their labor costs.
Yeah, thanks, Robert. Happy to. So as Robert mentioned, labor is the biggest expense at the hotel. It's also the one that we have most control over. And so with this new informational schedule, this will allow owners to quickly, and even operators, to quickly identify where there might be opportunity, overages in key areas of the hotel. This new schedule will be laid out to where you can see management and non-management positions, and then a total for the entire hotel by department. So that way you can really quickly dig in and find out, hey, these key areas, they're the ones that are over, and they're ones driving kind of overages at hotels, or where you're also saving in certain areas. And that can also key into a lot of different things from an analytics perspective. You can start saying, well, are we understaffed in certain areas? Because we're seeing it with, guest service scores, things like that. And this can tell you those type of things. You can correlate a lot of things to your labor with this schedule.
And John, there is a formula presented to guide people on how to calculate a full-time equivalent employee.
Correct. There is a formula that will be in the book that'll just basically line out, number of hours worked over number of hours in the standard work week times the number of periods, number of days in the period.
And Gina referenced earlier, again, the desire to have global adoption of USALI. Consideration was given to the fact that the standard work week does vary around the world. So, that is accounted for in this new schedule.
Correct.
Back to you, John. The second new supplemental schedule tracks a wide variety of mandatory costs and allocations that are charged back to hotels by a management company or a brand, if those are in place at your hotel. And this is just another example of a change or an addition that was initiated by the feedback we received from hoteliers around the world. So John, please describe the components of the new annual mandatory brand and operator cost schedule and how this schedule is best used and not used.
So the new brand and operator schedule is going to be like Robert mentioned, annual. And it really centered around when budgets are presented, so that when you're going through a budget review, you can quickly see from an operator and brand that you've been able to line up all those costs that are associated with the brand and operator. Because some of those things are, very important and you don't want to miss it. It'll also allow you to just quickly skim on one schedule, one page, everything in the rooms, that's hitting rooms, sales and marketing, A&G, so on and so forth. And it'll give you a quick idea of these are the costs to operate the hotel under this brand and operator. The schedule is not intended for benchmarking purposes because of different costs by brand, by operator, things like that. It will be very hard to truly get a benchmark perspective. So,
thank you, John. And then finally, Gina, back to you. All-inclusive hotels. So historically, the all-inclusive hospitality segment has been composed of smaller owners and operators with diverse reporting practices. The all-inclusive hospitality segment has experienced significant growth over the past few decades, and major hotel chains and hospitality companies are now investing in this segment. This trend has driven the need for standardization in reporting to enable benchmarking and improve decision-making at these all-inclusive properties. Can you tell us more about the extensive research that went into the development of this new section within USALI?
Yes, Robert, this is a very exciting development for the industry. And I couldn't talk about the process without first expressing my gratitude to my friend, Mary McCausland. She's a professor at Cornell and a member of the Global Finance Committee. And for those of you who know Mary, you know that she is curious and inquisitive, and she has a real passion for learning. And she was incredibly enthusiastic about taking on this challenge. So she helped author this section, and she did it through collaboration with industry leaders from some of the largest all-inclusive operators in the world. And some of those operators included AMR, which has been acquired by Hyatt, Playa, Sandals, Hilton, Marriott, and IHG, to just name a few. And through this research, we actually uncovered very diverse practices across not only companies, but also depending on the entity structure type and also geography. So there were some real challenges in building that alignment globally. And Mary did such a nice job through years, actually, of meetings and discussions and different revisions to the text. But what we have is the first ever unified reporting for all-inclusive. And I think it'll be very beneficial, as you say, because there are many more investors and brands getting into this space. And so that unified practices are really important. Just to highlight a couple of things, package revenue segmentation will be aligned with the EP reporting, though revenue allocations will not be made to individual departments. So this is unique, and this treatment reflects the unique operating model that the all-inclusive hotels maintain. There are many more changes that we will share, but stay tuned for the upcoming all-inclusive webinar that will be hosted on August 22nd.
Just a quick follow-up question. There's like 3 or 4 revenue categories now. It's not the traditional rooms, food and beverage, other operated miscellaneous income. What will
That's
the
correct.
inclusive revenue section be?
Yes, that's correct. The revenue categories for the all-inclusive industry are different, and it really reflects the way that they manage and operate the business. So the categories are different and primarily include package revenue and non-package revenue. Those are the big elements.
Thank you, Gina, and thank you, Mary. I know that was a huge undertaking, very diverse industry, and to come together with uniform standards was a major accomplishment. So thank you. So that concludes our discussion of the major changes. Now, I'd like to share with you some important dates that will be coming up. So while the USALI will be available for purchase, the 12th edition, next month, the committee is very much aware of what it takes to enact changes to the uniform system of accounts, both in terms of reporting systems and training. So we do recognize this, and that's why the effective date, even though you can purchase the book next month, is not until January 1st, 2026. And at that time, the book will be available for sale, the electronic version first, at the USALI Resource Center, usali.hftp.org. And then following that, in the summer, you'll be able to go to the same site and then order your softcover books as well, or they'll be distributed then. There will be volume discounts for organizations that buy in detail or buy in bulk. Details will follow on the USALI website. And one of the big new benefits I see this year is the ability to search the revenue and expense guide online. Again, for those of you like myself that have gray hair and been around a while, you're used to reaching to the shelf, pulling out the book, thumbing through the pages. Where now you can just go online, search that revenue item, search that expense item, and you'll be directed to the proper reporting department and department subcategory for that expense. Other things I'd like to make you aware of. As has been mentioned a few times now, this is the kickoff to what we're calling a deep dive series of webinars. And here's where we're going to have those GFC committee members that were directly responsible for researching the changes that we discussed, crafting the language for these changes, and they will be the presenters at these upcoming webinars. And it's at that time that you'll really get more of the detail and be able to ask questions of these GFC members about, the different sub-accounts and the schedules and how they roll up, how one properly accounts for the different revenue items and expenses within these major categories. So please mark your category. There's a QR code you can use to go to the USALI website, the HFTP website, and sign up for these webinars. And then finally, HFTP also offers a series of certifications that are USALI related. Go to the USALI resources website, go to the HFTP website, look for professional development, and you can register for the courses that help train you to achieve these certifications. So finally, we've been doing enough talking. It's time to answer some of the questions from you. Again, we ask that you use the chat feature. One thing is that because this is intended to be a very high-level overview, we would prefer not to go into the detail and depth that will be addressed in those upcoming webinars. So if you have a very detailed or specific questions about what are the major changes, we recommend that you wait until those sessions to ask those questions. That being said, please feel free to use the chat. And I saw a couple of questions come up. Gina, first one was when you're talking about executive lounges. And the question was roughly, how does the treatment of executive lounge expenses differ from the treatment of free food and beverage offered at several hotels, mostly free breakfasts?
Yeah, great question, Robert. So I assume we're referring to certain brands that offer complimentary breakfast as a brand standard to all guests, regardless of their membership status, in which case those costs would be recorded separately from the loyalty program member benefits that are delivered on property.
Ray, when you were discussing EWW, a question came up, and let me read it. Do we anticipate a clear definition of waste? Would that include such items as grease trap services? Will water include anything related to water conditioning? So I know we didn't want to get too deep into the expenses, but maybe you could address the definition of waste.
Sure. Yeah. So the idea about tracking ideas like waste is when you can track and measure what your waste is. That can be converted into greenhouse gas emissions because of what it is. So are you, does your waste include recycling materials? Is it composting? Is it items that aren't recyclable? And then with an estimate of what's in that. So the grease trap services, I think that might still be in PO&M as relates to some of those areas, because that's more of a service there. It isn't really related to the amount of waste that a property is producing. Just like water usage, we're trying to track the amount of water a hotel is using per room or per guest to track that. But there's a lot of details in there and in the EWW section about that. But like also it also depends. Each locality will have nuances in there. So I think they'll come some of the facts and circumstances with some of the kind of water treatment as an example.
Please, again, feel free to use the chat for any questions that people may have. Okay. Okay. So we have one question. Thank you, Ron. Are the various ERP vendors showing intent to incorporate these changes into their applications on an accelerated timeline? So I don't know if you've been working with vendors or, but I guess how the vendor community, how is this translating to them? Anyone knows, or is this, I know you all have your own internal proprietary systems. So that's, I guess you'll be working with your own teams to update your own internal reporting systems. We'll work with that again. Okay. Can we see the QR code again? Yeah, that will be, this again, the slides will be distributed. So I think we've sort of reached our conclusion of questions in the chat room. Again, let me just close by thanking Brittany and Millicent and HFTP and HNLA for organizing and sponsoring these webinar series. A personal thank you to my GFC colleagues, Ray, Gina, and John, for presenting today. And thank you to you, the attendees and users of USALI 12th edition. A reminder, you can purchase your 12th edition copy, electronic version, starting early June. And don't forget to attend those deep dive webinars when you can really ask good specific questions and get a lot more detail underneath these major changes. So with that, again, thank you to the attendees, and Brittany, I'll turn it back to you.
Awesome. Thank you all for attending today, and thank you again to our speakers. As Robert mentioned, lots of exciting news coming up in session, so be sure to register for those. The recording will be shared on the website. We will get it up by end of day today. And with that, I hope everyone has a great rest of their day.